Welcome and thanks for stopping by. I'm Coach Craig at Digital Micro Trading, and we're in Friday Globex, and I'm going to talk about trading the inflation report, one good trade setup for Friday. We have at 8:30 a.m. Eastern Standard a core PCE catalyst, and the PCE stands for the personal consumption expenditure. The core PCE is the Fed's preferred measure of inflation, and what it measures, United States consumer behavior and spending patterns much more accurately than any other inflation report. It measures consumers' spend and whether they save their money, how people change their habits. I don't care what the number comes out to be. What matters for a good trade setup on this is, number one, what's the narrative? The narrative is we're going into the end of the year. This is the last full week of the year, and we've got a huge displacement that just happened after FOMC. We've got in Washington a major transition of power happening that's actually already taking place in December. We've got elevated inflation. We've got a high dollar. We're going to look at the charts from the higher time frame, the price action imbalances, the premium, the discount arrays. Left side, Dow Jones, middle S&P 500, and you've got the NASDAQ 100 on the right. And what you notice, unlike the previous video, after FOMC with this huge black displacement candle on all three indices, we're all synchronized. There's no out of whack indexes here. They're all synchronized. That leads me to believe that we are potentially not done with this. We are definitely crossed from a premium to a discount. And these blue lines here, that is the 3 EMA, and you can see failure on with the close on FOMC Wednesday on this big black candle. We have not been able to do it. Thursday, we had candle wicks on premium candle wicks go through the 3 EMA, but not the bodies of the candles. So that's one narrative. I want to be clear. S&P 500 over here on the left, and on the right, the NASDAQ 100. And we're looking at weekly charts, and I've got Bollinger Bands, and I want to just basically measure how much displacement are we on the weekly. And you can see on the left here, we're just above that middle Bollinger Band, which is 5884.58, 5884. Okay, so this is going to be a line in the sand when we really on a weekly basis cross into discount. So we're technically still in premium. On the right, the NASDAQ's middle Bollinger is 2734, 2734. You can see here we're at 21308 at the bottom of this candle. And you can see the displacement's not even really displaced below yet the previous December candle. This was the beginning of December on the first week. We're not below that versus the S&P 500. We've totally blown through all of December, and we're working into November. So different tale of two cities here. And that's why for me, if I'm going to take shorts, it's going to be the S&P 500 for sure. So that's the weekly perspective. Let's go to the next chart. S&P 500 daily chart here. Here we are on the Bollinger Band. You can see we've punctured it 2 days in a row. FOMC day, Wednesday, Thursday, below it. And it's not like it's super narrow or wide. It's just average. But the point is, it's gone below now. We're on the third day. The 3 EMA, 59.52, and the middle's way up here, 660. Now, lipstick on this chart. I've got a daily fair value gap, okay? That daily fair value gap, consequent encroachment, 6059. So that is basically correlated and synchronized to the middle Bollinger Bands. Again, I like to have at least two correlated events happening, and this is really sweet, middle Bollinger and this daily. The D just stands for developing daily, but it's already developed, so I got to just change that to a daily. This red is the big thing. This is the rectangle that had multiple sell-side liquidity levels, and it's correlated to the lower Bollinger Band. So technically here, we might see a bounce. And if we were going to see the bounce at the minimum, I've got marked here a December 19th open range. This is prior days PM open range. We'll go into when we get a smaller time frame what price level that is, but 59.76 versus right now we're at 59.19. Okay, let's go to the next chart on a smaller time frame and a whole different subject. This is the major barrier for the S&P or the NASDAQ, in my opinion. If we have US dollar surging at the same time we have an elevated VIX, forget about it. You're not going to get bull market all-time new high as long as we're at these elevated levels on both. So the dollar, we've gone through a buy-side liquidity red line here, and above that, I've got a weekly fair value gap consequent encroachment. If we close above that, that's big trouble for a further sell-off, in my opinion, on the indices. On the right, you can see this giant FOMC VIX, and we still stayed green. We kept it. We're in the 20s, mid-20s, 24.09 on this. So that is a very big surge compared to just a few days ago in the 12s. So basically almost a 98, 97% increase in elevated VIX over the last 5 days. So these are the two big things to watch, in my opinion, on a daily level. If you see either one of these start to go dramatically lower on a closing basis on a daily, then sure, we could go back up on the indices. But otherwise, buying the dip here is extremely dangerous because of the US dollar surge and the elevated VIX. Next chart. One thing I like to do always is take a look at the top 8, and I've got equity stocks, some gold, the dollar. Let's start from the top left. Apple, it's hanging in there. It's probably the chart of December that's really had no downside, even though we had a big displacement on FOMC. Look how much we recovered here. NVIDIA, on the other hand, has definitely lost a little bit of ground from early December to now. This 122.91 line is near the price when we had the stock split on it. So if it goes down anymore at or near that 122, I might take a nibble on some with a real small amount. Tesla is hanging strong. Definitely wouldn't bet against that. And Google right here, same thing after that class action lawsuit announcement. You can see here, we're still hanging. Microsoft right here is basically hanging. Oil just is flatlining, gold flatlining, and then we already covered the dollar. So that's it. You can see no real major damage done on these big ones. I don't really follow Facebook too much or the Netflix. These are my cores. Let's go to the next chart. All right, S&P 500 on the right, it's a 1-hour chart. On the left, it's a range, Renko. Nothing to do with time, but I just, again, similar to Bollinger Bands, really like this. I actually like these Keltner bands on a Renko better than the Bollinger Band. They've been working better for me. Now, again, you have to be in context with what kind of day are we in and what is real price action on a time chart doing. And that's where I look here on the right hand. So let's go through this. On Thursday, the day after the big displacement, we've already gone through above what this big yellow box is. That's the daily fair value gap, and we seem to be miles below it. This gray box is the afternoon PM open range I discussed. So that's a ways away. Middle of that is 59.76. And here we are right now with the doji candle at 59.15. And you can see this discount wick here at the close of Wednesday, FOMC day, that had a low of 5907.25. So we're in that zip code right now. Price is just maybe 10 handles above it. and we are below the sell side liquidity. Let's say we were going to go lower, but maybe before that we go a bit higher. What I need to see here is New York midnight open price. I need to see London open in the London hunting zone for 3 hours. I want to measure the highs and the lows. And then, of course, we'll start with the New York AM at 7 a.m. Eastern. And then, of course, the big shebang is the news. We've already covered that news, 8:30. So the 8:30 is the first portion of the delivery. And then the second portion is going to come in when the New York traders come in. Probably all they're going to do is get in and make their trade for the day. And everybody's going to call it an early day. I do not expect to see a lot of people stick around after 11 a.m. especially. I don't want to be trading for sure after 10:30. This is basically the levels right here. Again, daily fair value gap, 6059. I'm not anticipating that going up. This thin purple line up here, that is the Thursday first present RTH fair value gap on the 1 minute. So again, the blue line here is 59.89 on the S&P micros. And again, that was RTH open for the 19th. But all that's past history because price just did one-way action. What was the one-way action? We had Globex range consolidation, and then London goes up. And then at the 7 a.m., we go up. And then right after New York decides on Thursday to rule on it, it just goes pretty much straight down. Now, the open range in the afternoon, there was an up and then again down below sell side liquidity levels and looking to break through maybe that 5907. So on the left, the Renko, we're at that lower Renko Keltner band. So the Keltner here comes in at 5909. So again, correlation here, lower Keltner, correlation here, that lower sell side liquidity from FOMC day. What is below it? What is below it? I've got another sell side liquidity. It's pretty much way down there. Another 100 handles below at 58. So could we go there? Sure. Things could get a lot worse for sure, but I'm not saying that's happening for Friday or even December. That could happen more when the volatility escalates and we have an unforeseen catalyst that happens in the market that's not on the economic calendar. So that's it. That's pretty much the big show here. We went weekly, we went daily. We're going down to the 1 hour because it's super easy to see. Relative equal highs would be basically in that previous day's RTH open. I don't expect that daily fair value gap to be really closed up on. We're in a downtrend. That weekly candles, don't forget, that was still not quite crossed over on the middle Bollinger Band on the S&P. It's close though, so we could go again crossing over. And the idea here is if you're going to go long, you don't want to marry that long too long. And we're closing the last full week of trading on Friday, right before Christmas week. So most traders are going to be out if they're not already. But there is a chance we could have a little bit of a holiday rally. Again, I'm going to hold a focus a little bit on that open range and see where we get New York midnight and London, and then we'll take it from there. I want to thank everybody for watching and stopping by. If you've made it this far in the video, thank you very much. And thank you to any new subscribers. Aloha, take care, don't overtrade or leverage, especially on this last day of a full week of 2024. Bye.